Welcome to another episode of Purchase to Profits. I'm Seth Ferguson. Make sure you hit the subscribe button so you don't miss our daily interviews with successful real estate investors. And I've put together the top 7 key market drivers I look at when analyzing a real estate market. Go to sethferguson.org to download your free copy. Our guest today is a real estate investor, owner of a successful property management company, and the co-host of the Cashflow Kings podcast. Jim Murray is the co-owner of the Lion Property Management Group. Jim, welcome to Purchase to Profits. It's great to have you on the show.
Yeah, thanks for having me. Really excited to be here. And I know that guests can't see it on podcast, but I'm envious of your bookshelf behind you. Oh. Being an avid reader, that's really cool to see.
Yeah, that's only probably an eighth of the book collection.
I love that. I love that.
Yeah, I'm a huge history nerd, so lots of history books.
Great stuff.
Actually, you were just saying before we started recording that you've moved into a new office. That looks like a good wall for a bookshelf right behind you.
Yeah. So I like to physically read a lot of my books. I know that some listeners and some of my friends, they're big onto Audible nowadays. But I keep my kill shelf at home. That's where I find my motivation, or that's where I set up my kind of reading atmosphere.
Yeah.
But yeah, there definitely would be a great spot.
Nice. Nice. So let's talk about your real estate goals right now. Where are you looking to go with real estate?
Yeah. So right now, 2 areas of focus. One is scaling my property management business to 1,000 units. We're currently sitting at 650. We're looking to work with accounting firms who may be working with a property manager that wants to sell, just being late real estate cycle here, or working with larger scale owners. Candidly, we could be a little bit larger than we are right now, but we focus on working with more of the right owners in our business than just working with anyone. So that has slowed down growth a little bit. Second piece that we're looking at, so my partner Frank and I on the Cashflow Kings, we're looking to syndicate, and I recognize that that's really the hot term right now, but we're looking at 2 markets. We're looking at Columbus, Ohio, where I went to school, and then we're going to keep the other market under wraps right now because we're really excited about that one.
Okay.
I recognize a bit of the gold in syndicating is finding the right area.
Mm-hmm. No, that's great. So how many units do you have right now yourself?
Yep. So I personally own 8 units. In our market right now, where we've made money this year is flipping multifamily. So we've flipped a couple multifamilies. Just the prices that we're able to get them at as a distressed asset and where we can sell them, they're much more attractive to generate the capital on the flip right now rather than holding.
Yeah. And so, going from doing the flipping of the multifamily to now you want to start syndicating. What sort of changes did you have to make in how you thought about the asset to make that switch over?
Yeah. So honestly, it's all the due diligence. It's on a much larger scale. So it's really trying to search to find the right market. And Frank's done a great job of that. But then diving into the numbers as deals are presented to us. The biggest thing is building the network in that area. So finding the brokers that are going to have exposure to those larger deals and then coaching them on specifically what it is you're looking for. Mm-hmm. So I would say shifting the networking a little bit. So networking remotely is a little bit more difficult, but thank God for bigger pockets and social media. It's helped us tremendously. And then the shift is just looking at it more of a macro scale. So my multifamily investments have always been between Rhode Island and southeastern Massachusetts, where I grew up. So I'm familiar with the neighborhoods and kind of where they can go or where the shifts in the neighborhoods are happening. But trying to find that remotely is much more difficult. So that's where we talked about one of our first targets in Columbus, Ohio, where I spent a couple of years going to college. Familiar with neighborhoods, familiar with where the edges are. And those edge neighborhoods are really where you can find some great value.
Yeah, for sure. And what would you say is the number one challenge you guys have right now, not only on the investing side, but also property management?
Yeah, so it's really finding the deal. So I know that a lot of folks struggle with capital. Fortunately, I work with a ton of great investors that are very well capitalized, extremely wealthy individuals. So the money's not the issue, it's more finding the deals. So we're actually going to shift our property management company starting in 2018. I'm going to jump into a role where I start to hunt more off-market deals to feed them back into the portfolio. So more of a focus on sales and marketing. That's really where our investors are hungry. They want to take down more deals. And just late stage of the cycle, it's been more difficult because cap rates are so compressed.
Yeah. And I I think you said 2018. So do you mean
Oh,
2020?
sorry, sorry,
Yeah.
2020. It's
I
like
was like,
dog. Yeah,
am
sorry,
I
it's like
in
dog
time?
years in property management. We're
Yeah.
talking like 2 years ago, but yeah, sorry, 2020. Appreciate you keeping me honest.
Oh no, it's. I was listening. I was like, wait a second. The 2020.
Yep.
Wow. Okay. And so, as you're building your property management company, did you hit any plateaus in your growth? Because you're at 600 and something units right now. Did you hit any ceilings along the way?
Yeah, absolutely. So this year was a big plateau. So I sat down with my accountant sometime probably the end of 2018, and he said, listen, if you want to be really successful, this is what you have to do. This is what I did in my own accounting business. He's like, some folks may not like this, but this is the stage that I think you're at. He said, sit down, print out a list of all your clients and stack rank them. A, B, C, and D. Maybe stack rank isn't the right term, but put them into classifications of A, B, C, and D clients. So A, those are your favorite clients to work with. And hopefully you only work with A's, but probably not. B's, less favorable than A's, but those are the clients you still want to work with. Any C clients that you have, you want to go back and have a conversation with them to say, hey, listen, I recognize there's probably frustrations on both sides of this equation. This is what a really great working relationship looks like for us. And then give them 6 months to get there. The accountant recommended that that's a great in-person conversation to have, rather over Zoom or at a lunch meeting. And then if they don't correct course over the next 6 months, they become a D client, and D clients are automatically released.
Yeah.
Now, a lot of times as you're building a business, you got to take on anything you can get in the beginning. But I would say as you begin to scale and you get to not a comfortable point, but a point that you can transition a bit to work with clients who are going to lead you to more success in the long run, that's the point that you want to get into that exercise of ranking your clients.
Yeah, and from experience, I know from experience, it's usually those C and D clients that take up the bulk of your time anyway, and it's
Yeah,
just so frustrating.
so that was where we were really getting stuck and bogged down. We started looking at where we're spending our time on a weekly basis. And we're spending so much time on those C and D clients for things that are minuscule, or like clients that were trying to bump the process. Because you got to think, like, as you hire a property manager, you're hiring them for their process. That process is what is going to earn you the return on your real estate that you want, right? So if we're having clients trying to buck the process because they think they know better, that not an issue. We can either route you guys to another property manager who's a better fit, or we can hand it back over to you because they clearly know a lot better than we do. So,
Yeah.
not saying that we don't take client recommendations, but we have a very tried and true process that we're confident in. And the way we structure our contract, we put our money where our mouth is. So
Yeah. And I found a lot of property management, guys doing property management make really successful investors because they're all about the systems.
that's
So
it.
can you speak with us about developing systems, maybe as a real estate investor, because that's where a lot of people struggle when they're first starting out.
Yeah. So the system, I would say, as a real estate investor, it all starts with purchase, right? So having the right system of how you analyze a deal. I have a simple spreadsheet. My property management partner's name is Chris. Chris calls it the Jimmy sausage machine, of like pumping out the sausage from the back end to decide if we're gonna buy the property or not. But it's a simple Excel spreadsheet. It's revenue minus expenses to get to your net income, and then you divide by the cap rate that you want to get to.
Yeah.
So I joke that if you want to be a successful real estate investor, if you can add, subtract, and divide, you can make thousands of dollars in real estate.
Yeah.
Uh, so
Or even if you just hit buttons on a calculator.
yeah, right.
Yeah.
It's really that straightforward. Now I know it's tough because real estate can become an emotional business with some of the tenant issues that we face, but you really got to bump it back into the process of, hey, we do these things, and this is how we accomplish what we need to get that return. So I would say the process up front starts with how you analyze a deal. So working through figuring out what the revenue is, what the expenses are, and getting to that number, knowing the cap rate in the neighborhood that you're in. And then from there, at acquisition, the process starts with even as something as simple as how you introduce yourself to tenants, right? So even as a property manager, anytime we onboard a building, whether it be from an owner or another property manager, we're going out face to face and meeting those tenants. And if we don't meet them face to face, we will, or when we meet them face to face, we'll hand off a one pager with a business card to kind of establish legitimacy, but also give them that comfort of having that relationship based approach. From there, if we don't meet them, we'll leave the literature that we have, and then we'll follow up with a phone call to say, hey, listen, this is where our office is. If you guys want to stop by, set up a meeting, we'd be happy to meet you. If not, if you have a maintenance issue, we'll probably be able to route somebody out and you can meet somebody on our team that way. So it's all about establishing that relationship up front, and your tenants are going to value that. Now, where most investors trip up is they become too friendly with your tenants. So I'd say from a process perspective, you have to be able to walk that fine line of saying, hey, this is where I'm going to be tough and this is where it might be a little bit easier, but make sure that it's consistent in your process when you do that.
Yeah. And, like you said, it's all about setting those expectations, because once expectations are clear, everybody knows where they have to, where the line in the sand is.
That's exactly right. And I would tell you, so my very first investment was a 4-family property. It was not easy off the jump. But I will tell you, when I started holding tenants accountable, it took one tenant for the rest of the building to fall in line. I call it the shot across the bow. You send that cannonball right across the bow of the ship, and then everybody else is either going to fall in line or they're going to get up and go.
Yeah.
To say, hey, listen, this is a good landlord that we want to work with, however they handle this, or this is someone that's going to take us very seriously and we won't be able to get over on them like we got over on the previous owner or manager.
Yeah, I like that shot across the bow. So what sort of routines and rituals then have you developed as a real estate investor that have helped make you successful?
Yeah, so I think that I have a very strict morning routine, and it's not necessarily related to real estate, but the way that I talk a lot of folks through it, and I talk my partner through this, he's a big basketball fan. So I grew up playing a lot of baseball. So if I trip him with this basketball analogy, it might be a little bit different, but you got to think, I'll use LeBron James as an example. I know that everybody loves LeBron, but when he gets ready for that game, it doesn't just start when he walks on the court. It starts when he wakes up in the morning, right? So what he eats for breakfast, the fluids that he takes in, and then by the time he gets to the arena, right? So when he gets to the arena, he's probably tying his shoes a certain way. He's going out taking so many shots from the free throw line, from the three-point line, and it's all about that rhythm. And then when he steps up onto the court, he's already warmed up. So that's the way I think about my morning process. And whether you're in a 9-to-5 job or you're a real estate investor, I think you have to create some type of routine to warm your body and your mind up to be ready to take on the day.
Yeah.
So the way that I start my day every day is I wake up and I read 20 pages of a book. So that's been huge to set the rhythm. I can wake up, and even if I'm a little tired, I'm still, laying on a pillow under a blanket. I'm comfortable, but at least I'm starting. By the time I'm done reading my book, that's when I'll get dressed and get into a workout. So I'll hit a workout for 30 minutes. After that workout, as I'm cooling down, I'll meditate. I use the Calm app. That's been really helpful. So it all depends on what I'm trying to focus on, what I'm trying to redirect in my head. But I'll leverage that Calm app to cool down from the workout and then level set my brain. From there, typically jump in the shower. I can't remember who it was, but he talked about how a shower every day has to be earned. I'm sure it's some famous speaker, but I can't remember what that is. From there, the best part of the routine is I make myself breakfast. One, to save money, so I'm not going out and spending a ton of money on breakfast. Yeah. So in Rhode Island, Dunkin' Donuts is huge, and their prices have become outrageous. But while I'm making breakfast, that's kind of like my me time, and I keep my book of affirmations on my kitchen table. So I know when I sit down to eat breakfast, I pop open that book and I write down 25 affirmations. Those can shift over time, but they generally stay the same. But I'm a huge vision guy. So those affirmations are absolutely going to set my vision. And then that's the last thing that I do before I head out the door. Nice. So my biggest goals are in my head as I'm heading out the door, and now I'm prepared for the day.
Yeah. What was it that had you choose 25? Was that just an arbitrary number?
So it's really interesting. So I started with 25. I'm looking to my left here because I have a legal pad. There were 25 lines on the legal pad that I used. And then when I transitioned to the book, fortunately, there were 25 lines on the page in the book. So it wasn't, I guess it was not by design. It just kind of happened.
Gotcha. Yeah, no, I like that. And so many guests mention meditation. I haven't made the jump yet, but I almost feel like I have to because everybody is telling me it makes such a big impact. Yeah.
So honestly, every person that I used to sit down with, I'd ask them for one book recommendation. And honestly, that's how I filled up my bookshelf. And now I'm a little bit behind, but because I would go on Amazon and immediately buy the book. And then I started talking with the folks and they're like, I don't read as much. I meditate a lot more. And that happened like 4 or 5 times, like back-to-back meetings. I'm like, all right, I got to get into meditation here. Yeah. And honestly, it's just like the act of sitting there and breathing, deep breaths, trying to clear your head. It really helps out.
Yeah. At some point in the next couple of weeks, I'm going to have to jump on the bike and do it. So
awesome.
Yeah. Let's talk about a keystone deal. So a deal that made a big impact on you and your business. Is there one that comes to mind?
Yeah. So the biggest, there are a couple. That's what I'm struggling with right now.
All right.
But I would say like the biggest the biggest deal that we landed from a company perspective, we landed a very experienced entrepreneur had who owns 50 plus units in the Providence market, right? He's coming from two different property managers, one who runs a very similar process to ours, except doesn't have as much as a relationship based approach, and one who he coined the cowboy. They were in like the wild, wild west. Um, they, so just to give you a little, for instance, there, the Cowboys actually found it fun to play strippers who just paid them in cash, and that led to evictions and a whole bunch of crazy stuff, prostitution, everything down the road. So I'll keep it kind of PG here, but that was
Right.
an entirely different experience. So the portfolio that we have coming across is very diverse. So that really challenged our company from a number of different perspectives because a couple were college rentals, a couple were in D class neighborhoods, somewhere in that kind of BC in between and blue class neighborhoods in Pawtucket, Rhode Island that we're really familiar with. But the process that it took to get the information from these property managers, because of course, when they find out that they're losing the contract, they're throwing us the middle finger. They don't want to give us any information.
Yeah.
Which isn't always the best approach because it comes around, right? There's going to be an ebb and flow of units, but really trying to stabilize that portfolio. That came kind of early on in our company, and it was a huge task to get us up and running. Eternally grateful for the investor having the confidence in our team to do it, but man, we went through turnover after turnover after turnover. In that first year, the investor had to make a large capital expenditure in order to get the buildings up and running. But this year, he's been able to recognize much more of a gain. So taking on that 50 plus unit portfolio at all different stages of the spectrum, that really helped us level set the processes that we have inside our company, right? So from the turnover process, the leasing process, to get everything really tight so then we can deliver a better product to our clients.
Yeah. Do you still rent to strippers?
Yes, if they have W-2 income. And honestly, so I was in a BNI group at one point, and there was a DJ in the BNI group, and he was very quiet about this at BNI, but he shared with me outside that he was a DJ at a local strip club, and he has I'll call it a lady of the night call me maybe like once every couple months, being like, "Hey, I really need an apartment." I'm like, "Great, can you show me your W-2? Did you get a 1099?" And then I don't hear from him ever again.
Yeah.
So I wouldn't discriminate against that. I would absolutely rent to them, but it's going to be verifiable income, and that comes back to process, right?
Yeah, 100%. And you mentioned that sometimes a property management company getting the boot, if they're going to be changed over for a new company, won't make the transition as easy as it can be. What sort of things can a real estate owner do to help make that transition as smooth as possible?
Yeah. So here, my eyes opened up on that one because so many times I see investors or newbie investors work with realtors who don't know as much about rental real estate. So the one biggest component that you should always get on an income producing property is a tenant estoppel. And that's really just a fancy term for verifying what the rent is. You have the tenant, the owner, and the buyer all sign this document. So on day one, when you go to collect rent, there's no surprises. But I can't tell you how many deals, like an investor will close a deal, they won't use us, and they'll use a realtor that they have a relationship with, and I'll go in and it'll be like, "Hey, this is the rent roll I got from the owner." I'm like, "Great, where are the estoppels?" I don't have them. I'm like, okay, this could be a roller coaster ride, or we could get really lucky. Fortunately, we're in a pretty good spot more times than not, but there have been a couple scenarios where I show up on day one and the tenant says, "No, I only pay $500 a month," and I'm like, "Well, here's the estoppel. You signed at 900, right?" So even with the estoppel, it protects you, but the tenant could still try to pull one over on you.
Yeah, for sure. And there's always stories you hear of one seller switching up the rent roll from another property to that property and trying to pull the wool over your eyes.
Absolutely, yeah.
Yeah,
I mean, fortunately, hopefully, we're in the same boat that we try to do everything above board, right? Because
yeah,
it's like that good karma that's gonna lead to more success down the road. But there are a lot of slumlords out there, for lack of a better word, right? There are a lot of people who buy that multifamily investment and think that it's just going to be the U.S. Mint and print money. And then when it doesn't happen, they try to just get through the transaction as quickly as possible.
Yeah, 100%. Since getting into real estate, what sort of impact has real estate had on your life?
It's been amazing. So I always had the goal to quit my 9 to 5. So originally when I came out of college, I started looking at multifamily real estate. I just thought it would be cool since I had $70,000 in student debt to try and get a place and hopefully not have to pay for it if my tenants were paying for it. So this is before the whole house hacking trend. Maybe it was just smaller and I wasn't aware of it. But that was originally the goal. And then I got into it. I bought my first one. I was like, holy cow, I'm living in this 4-unit. I'm actually getting paid to live here every month. How do I continue to do this? So I started looking at other avenues. So I looked at wholesaling, closed a couple deals. Wholesaling is very difficult. But what I quickly realized is that I was good at talking to tired landlords. So in December of 2014, I caught a bad review. I worked for a very large investment manager based out of Boston, Massachusetts. And after that bad review, I walked directly back to my cube and I texted my now partner. I said, let's launch a property management business. And he's like, can we grab a beer first? So I would say real estate has had an amazing impact because it allowed me to leave my 9 to 5 job to focus on something that I really care about.
Yeah.
And I know that people probably think I'm crazy that I enjoy property management, but it gives me more freedom to do the things in my life when I want to do them. So having that time freedom that, if I want to spend an extra hour in the morning with my son, or maybe, take an early afternoon off to go play golf, as long as I put in the work beforehand, I can set up the freedom that I'm looking to achieve.
Yeah. And, when you got the bad review and sent the text, did you have a plan? Because lots of people, they're sitting on the fence and they don't want to pull the trigger and actually make the leap. So what sort of things did you do at that time to help make that transition better?
Yeah. So I didn't quit immediately. So the idea of like the Gary Vaynerchuk side hustle is huge. So I would say, build that side hustle first. 1, to make sure it's something that you want to do, and 2, enjoy doing. Because if you're going to quit your 9 to 5, you got to enjoy what you're going to be doing, right? So my partner jumped in full time, and then I jumped in nights and weekends. So we kind of covered around the clock. But make sure that you're able to develop that side hustle and grow into something that you want. I was able to quit a 1.5 years later, which was really cool. It may take a lot longer, but have patience and trust in the process, and you will eventually get there.
Yeah, good stuff. And let's look ahead 10 years, so a decade from now. Where do you see yourself in a decade with your business in real estate?
I want to be Marcus Lemonis. So anyone that doesn't know Marcus Lemonis, he has a show on CNBC called The Profit. And what he does is he goes and he helps turn around failing or struggling businesses. And that's really that's always been the end game, right? So build a property management company. It gives me access to capital and do really cool things, but build the financial freedom from cash flow. And then from there, I've always been entrepreneurial, or I've always had an entrepreneurial tilt. So I'd be really excited to go in and turn around some of those smaller local businesses, not as large of like a private equity scale, but more local to really impact families' lives.
Yeah, no, I really like that. Who's the guy that does Bar Rescue, the TV show?
Oh, John Taffer.
John Taffer. You could do like a John Taffer kind of take on that.
So my partner, Chris, is the yeller. I'm more of the quiet guy.
Gotcha. Okay.
So Chris does love John Taffer, though. So I'll have to tell him that. We'll have to turn around restaurants and we can just film him, yelling at the people trying to turn it around.
Nice. I love it. So Jim, if somebody's looking to reach out, learn more about what you're doing, maybe on the property management side or even your podcast, where can they find you?
Yeah. So the best way is on Instagram. My handle is REI, Real Estate Investor, REI Cashflow King. And that would be the best way to hunt me down on social media. Shoot me a DM and I can help you.
Perfect. Well, I just want to say thanks so much for taking the time today and sharing that really good advice with us.
Awesome. I appreciate your time as well.
Yeah, pleasure was mine. And to you, our reviewers, I wish you well on your journey from purchase to profits. See you next time.